Welcome to Crypto Megan, as I keep you updated on upcoming trends and news that moves the markets. Jumping right into it, crypto and the stock market are on very thin ice as uncertainty prevails while the FOMC conference is underway. FOMC stands for Federal Open Market Committee, and this is all the talk on the internet right now. So, why is this meeting so important? In this meeting, the Feds will discuss raising interest and lowering quantitative easing by buying bonds to inject more money into the market. And the question on everyone's mind is, what will they decide at this meeting? Will they decide to do something to lower inflation and help the US dollar, or will they not? I will keep you updated in these coming days as to what the decision is and how this will affect the stock market and the crypto market. And Congress is facing yet another financial crisis as US debt reaches an all-time high. President Joe Biden said, quote, "The US always pays its debt when debts are due. That's why I fast-tracked signing a bill to raise the debt limit." Now, that might sound strange even to those of us who aren't the most financially savvy. So what is a debt limit and how does this affect our economy? A debt limit is a cap on the total amount of money the US federal government is authorized to borrow in order to fulfill its financial obligations. The problem is the US spends much more than it brings in through taxes and other revenues. So it needs to borrow huge sums of money in order to pay its bills, basically. Some may consider this as a sort of kicking the can down the road approach just a little bit further in order to avoid the inevitable. US Treasury Secretary Janet Yellen said, quote, "Agreeing to raise the debt ceiling effectively means that we are agreeing to raise the US credit card balance, and failure to act could lead to economic catastrophe." This could mean a potential downgrade in the US credit ratings, which would hammer treasuries. Demand for US treasuries could sink if they're no longer considered a reliable, safe haven asset by bondholders, and then bondholders in turn could demand drastically higher interest rates due to the increased risk. This then could have a cascading effect and in turn would send other borrowing costs higher, including credit cards, car loans, and home mortgages, which are usually pegged to the yield on US Treasury notes. Just the fear alone could rattle the stock market and send shockwaves throughout the economy. If we go back about a decade, in 2011, there was a debt limit standoff in Congress, which brought the country dangerously close to default. And although they struck a deal at the last minute, that didn't stop from the US's credit rating being downgraded and massive market volatility. It hit investors very hard and it ran the risk of a cascading financial crisis. Given that the US has never defaulted on its debt obligations, the scope and the magnitude of the negative repercussions are unknown. However, it is expected to be a catastrophic event for both the US economy and the global economy, given that the US Treasury is the global benchmark safe asset, and a default would likely cause a financial crisis and a recession. But if we go back to that same year and we have a look at what Federal Reserve Chairman Alan Greenspan told NBC, was that, quote, "The United States can always pay its debt because it can always print more money. Therefore, there is zero probability of default." Very telling times back then. It all leads to the same road for me in that, in my opinion, it is impossible that the Feds will allow us to go into a recession and have a shockwave in the economy, and that they will inevitably step in and inject more money and stimulus into the markets, which will then lead to bullish momentum again. I do not believe, due to many reasons, political unrest, politicians wanting to be liked, people not standing for what they stood back for in the 80s when there was an actual recession, that this is not going to play out that way, and all of this doom and gloom will be behind us for now, and the bullish momentum of crypto and the stock markets will return. There's a lot of fear and unrest in the market right now as the new variant of the pandemic prevails and the narratives are doom and gloom and negative. I feel nothing but optimism inside for cryptocurrency and the future of our digital world. We are in for a very bright future and on the brink of a massive opportunity at play. Nothing has changed fundamentally, and I continue to average into this dip and more bullish than ever. On a brighter note, crypto investors woke up to a seemingly out-of-this-world Christmas gift. Imagine going to bed with a few $1,000s invested in your crypto portfolio, waking up, getting ready for the day, pouring your coffee, checking your portfolio, and realizing that it has ballooned into the billions. Although it was just a glitch in CoinMarketCap, it may be telling of the times to come. On other news, whales have been gobbling up this dip, and on-chain analytics show that derivative investors have actually been leading the way on bullish bets for Bitcoin. And a recent price metric shows that we could be on the verge of a monster bullish move for Bitcoin. That paired with the fact that exchanges are at all-time lows as far as BTC being on the exchange since the last all-time highs in 2020. That means that more people are buying and taking off the exchange than ever before. And then we got retail investors adding Bitcoin like it's March 2020. That's right, those who were savvy enough to invest in the March 2020 crash when Bitcoin went down to $3,600 are the same people that are still willing to buy this crash. Similar market environments, the scare from the pandemic, markets are rocky, yet Bitcoin is now hovering around 50,000 and the same retail is still more than ever interested in this asset. So data shows that retail interest is still surging even at these price levels. There is overwhelming data suggesting that the narrative when Bitcoin at its 40% drawdown from 69,000 all-time highs to its current levels has flushed out the speculative market, and we may be reaching a local low. And moving right along, Jack Dorsey's block, formerly Square, will allow users to gift Bitcoin for the holidays through Cash App. Go Jack. So skip the scented candles and the Bath and Body Works and help your friends and family start investing. And speaking of gifting crypto, if you need some ideas, you may want to consider Charles Hoskinson's ADA or Cardano as the perfect gift. It is a very important cryptocurrency in the crypto sphere, and it is currently very beaten down as it was delisted from eToro and been the laughingstock of the crypto world lately. But we all know when cryptos are down and they're good coins is the perfect time to be looking into them. Not financial advice, so do your own research, but according to certain traders, Cardano is at a point where we could expect a 30% surge to the upside due to a looming triple bottom. That's all I got for you today. Thanks for tuning in, and until next time.